All right, is Bitcoin and crypto gonna pump or is gonna dump from here? We're in a very confusing time right now. Are we gonna have a bad September? Are we gonna have a big bounce? When does the top? September, October, November? What would a top look like for the entire US economy, stock market, and also crypto, right? So we can have a better warning before it happens. So a few major charts I want to show you guys today, right? And one of them is this. Why is gold prices blowing off right now? Why is the stock market worried? Because look at this. The red one is UK, United Kingdom rates. The blue one is United States Treasury rates. And the white one is Japan. Yellow one is France. So basically all these economies are showing a lot of trouble right now. They're basically since the April 2nd, this is April 2nd, since the start of Trump's Liberation Day tariffs attack on the rest of the world, basically 10-year yields, 30-year yields, this is 30-year yields, bond yields have gone up everywhere around the world. And that is a sign of some inflation coming. They're saying inflation for the next 30 years, right? I think they're going to drop because we're going to have some bad economic data coming in, including the US one. US is 30 years shot up. And if you look at US 10-year today, it shot up before, shot up above 5%. That's a major big deal. For some hope here, I'm going to show you guys this chart. Basically, we can see that this was the 2013 bull run. And they had a major drop here. Remember, this is a logarithm chart. So a drop like this is actually huge. A drop like this is actually huge. This is when price was around $100, right? This was the September 2013 bull run. September was the bottom. Boom, Bitcoin shot up huge to $1,000, 10x afterwards, and that was the top for the bull market. And then prices came down. And 2015. This was the bear market bottom, September bottom, boom, we went up again. And then basically September bottom again in 2016, boom, we went up again. And this was 2017, 2017 bull run. Just before the end of 2017, boom, September bottom, and up we go, topped in December 2018, all right? Here was 2019 bear bottom. The September didn't work out. It basically prices kept on going down. But in the next year, 2020, 2021, people might remember this, September turned out to be a major springboard for a major run up in Bitcoin, double top. But here was the September in 2021 and also gave us one more extra push, a major altcoin season. This was September 2023, boom, major bottom, right, run up. And I'm sure you remember last year, 2024, September was when pretty much Bitcoin and altcoins and Ethereum bottomed, because that's when the Japanese reverse carry trade blew up and Bitcoin went to 49K. That's where it bottomed. August 5th was the bottom, but September it's pretty close. Everything turned up. Out of these 9 Septembers, only one turned out to be a disappointment, and that was 2019. So if we believe the bull market would continue, then basically chances are this September could prove to be some sort of bottom. And if it's going to be a bottom, it doesn't mean it stops 107K, could dip down below 107K, like I was saying before. But either ways, keep an eye out over the next 4 weeks. This could be the bottom for a next swing leg up. Okay, what about the overall economy? How's it looking right now? So this is the way I think it would play out, as we saw back in 2019 how it played out. So this is the US 10-year Treasury rates. As it's going down, because it means the Federal Reserve is cutting interest rates, right? And when they cut interest rates, US 10-year Treasury rates go down, but you can see it's a slow, gentle slope, right? When 10-year yields come down, that means the market is risk on. Why is that? Because it comes back to Benjamin Graham and Warren Buffett. Those guys basically, it's mainly Benjamin Graham, uses the US 10-year Treasury yield to value the value of stocks. Basically, it's the free cash flow model where you divide all cash flow projected over the next 10 years, 20 years, whatever, by the US 10-year Treasury yield. So the higher the yield is, then basically the less your stock is worth. But the lower the yield is, right? Lower the yield is as it drops, then the higher the market cap, the value of your stock is for Nvidia, for AMD, Intel, Microsoft, Amazon, Tesla, all these companies. So this is risk on. When this is happening, right? This is happening in the 10-year Treasury yield when interest rates, this is actually Federal Reserve interest rates, was going down. So it came out of the GFC, it was at 0%, and then Fed took it up 250 basis points, or 2.5%. And when they cut rates gently, it means the US 10-year yields was also falling, because they pretty much track one another mostly when things are normal, and that means the market is risk on, that means stocks go up, and that means Bitcoin go up a lot. But then COVID hits in Jan 2020, and we see major crash in US 10-year Treasury yields, and that's because the Fed instantly took it to zero, right? This gentle cutting, it was 9 months or 270 days, and then boom, sudden massive rate cut was happening like one or 2 days when the Fed cut rates to zero. I think it was March 2020, the week of March 14th, 2020, when Jerome Powell, the chair of Federal Reserve, said basically unlimited quantitative easing, unlimited support for the US stock market, and then boom, US stocks took off. This is not US stocks, but this is, pretty much US 10-year Treasury bonds. And now here we are again. We all know inflation's been going up, so they hike rates to 550 basis points, 5.5%, and then cut back down to 4.5% now. And now 10-year Treasury yields are still yet to move down because of the threat of the Trump tariffs. They're still hesitant to move down, but if they do move down, then we're going to get massive risk on. This is blow off top. That's what I'm talking about. But if we get a sudden cut in interest rates, if we get interest rates to go boom, suddenly cut to 2%, like we cut 50 over 3 meetings, something like that, which is what Trump's asking for. If that actually did happen, that would mean a major crash in US 10-year Treasury yields. That would mean the US economy is in major trouble. So what we want is gentle rate cuts, not a sudden rate cut. I will keep you guys updated on how this bull market is going and when I think it tops. Okay? Thank you for tuning in. Catch you next episode.